Have you noticed that RMD conversations feel a little more confusing now than ever before? Even though the new rules were supposed to create some clarity, clients hear age 70 and a half, age 73, age 75, penalties, multiple accounts, and they just turn to you and say, hey, please just tell me what to do and just make sure I don't get in trouble. Hi, my name is Don Tiegs. I'm the Concierge Insurance Director for IFC National Marketing. In this episode of the Concierge Corner, we're going to tackle the uncertainty around RMDs and how income annuities can help create a simple, tax-aware withdrawal strategy that supports your client's retirement income and also reduces the stress your clients have around taking their RMDs. So I'd like to begin talking about the new RMD reality your clients are walking into. For most people born between 1951 and 1959, RMDs now start at age 73. For clients born 1960 or later, RMDs will start at age 75, again, once we hit 2033. And the penalty for missing an RMD is still painful. The standard penalty is 25% of the amount that they should have withdrawn. Now that can be potentially reduced to 10% if it is corrected quickly. On top of that, RMDs from each 401k have to be taken separately. Now, IRAs can be aggregated, but your clients may not remember which rule applies to which account. And then on top of that, if you add market volatility, when the market is down, some clients just hate being forced to sell off investments just because the IRS says you must take this much income this year. So underneath all of the technical rules, what they really feel is this: I don't want to make a mistake. I don't want any surprises. And I don't want to guess wrong. Well, guess what? That emotion is where you can add tremendous value. So here's the simple positioning shift. Most RMD conversations sound a little like this. Hey, Mr. or Mrs. Client, we're going to need you to pull out this amount by December 31st so you don't get penalized. Now, that's technically accurate, but it doesn't feel like a strategy now, does it? It feels more like compliance. Now, let's change that conversation. Here's the language you can use. So, Mr. and Mrs. Client, instead of wrestling with RMD rules each and every year, let's turn a portion of your IRA into a guaranteed income stream that naturally helps cover your RMDs and supports your lifestyle in a more predictable way. Now, does that sound fair? So that's where qualified income annuities come in. And today, there's other strategies, but we're not going to be talking about QLACs or talking about qualified charitable distributions. We will be talking about income annuities funded with qualified dollars that creates a steady, reliable paycheck in retirement. So imagine this. Imagine you have two types of people. One who will want to spend their RMDs and the others who don't need their RMDs. Now, for these people, there are other strategies that we can get into, or we will get into in another Concierge Corner episode. But today we're going to keep the focus on income annuities. So you see, with both types of people, the conversation is a little different based on who you are in front of at the time. So let's take those clients who will spend their RMDs. Think about the client who says that, yes, we are going to use that money for our living expenses, right? Now, for them, do you think they might also be worried about running out of money? Or do you think they might also be concerned about market volatility? So here's a simple way to position that strategy. If you just take a portion of their IRA and allocate it into an income annuity that has a lifetime income option, and time it so that the income starts around their RMD age, 73 today or 75 for the younger clients down the road. And we can design the payout so that the annual income is more or less in line or maybe even above the RMD on that portion of the account. From the client's point of view, now you get to say, this part of your IRA will send you a steady monthly paycheck. And that paycheck helps take care of your required minimum distributions. And it also gives you more flexibility with the rest of your investments. Now, instead of scrambling at year end, they know that the income is already scheduled. So you've turned a required withdrawal into a structured paycheck that is easier to live with and easier to plan around. Okay, for those clients who may not need the income, think about your higher net worth clients, or maybe even those that are still working in their 70s. They may say, I'm not going to need the RMD money. For them, the fear isn't running out of money. They still might have the market anxiety, but the real fear is them losing control over their accounts later in life. So identify clients who are about maybe 5 or 10 years away from their RMD age with large qualified balances. Use a deferred income annuity or an annuity with an income rider, and that is scheduled the income around their RMD age. Frame it as, pre-building future RMD paychecks. Again, we're setting up the future income stream that can help handle the majority of your required withdrawals so you can have more freedom to manage the rest of your assets for growth, for legacy, and also for tax planning. Now, RMDs stop feeling like a random number or compliance and start feeling like a part of a deliberate income plan. So now, when I talk to agents, a lot of agents say, well, how can I add this into my practice? Well, there is a simple 3-step process that you can implement right away. And the first step is simple. Just identify those clients that are RMD sensitive. Run a quick report on, those ages 65 to 78 with meaningful IRA or qualified balances, or even multiple retirement accounts. These are your best prospects for an RMD simplification conversation. Step 2, put them in 2 lists. Step A, or list A, we're going to use the income, or step B, or list B, we don't need the income right now. So each list has a slightly different income annuity approach, but the same core message. Less guesswork, more predictability, right? And then step 3, use one simple visual in every review. Show 2 different paths, right? Path 1, market accounts only, forced selling, RMD guessing, more volatility, more guessing about how much income they're going to need, right? Or path 2, market accounts plus an income annuity plus a built-in paycheck, smoother tax planning, less pressure on the portfolio. Now, we're not saying that annuities replace everything, but what you are saying is that you're going to help stabilize one of the most stressful pieces of a retirement income plan. And what if these conversations for you are, feel a little uncomfortable, right? Let's address that. For a lot of agents and advisors, these conversations are not natural. Talking through RMD ages, tax timing, income annuities, portfolio impact, all of that can feel a little intimidating or maybe just a little too advanced. Now, if that's you, I want you to hear this. You don't have to be the expert in the room. You just have to be the person who brings the right expert to the room. And that's exactly why IFC has built the concierge service. So if you're unsure how to present an RMD and annuity strategy, I can step in as your resource. We can do joint calls together. We can do Zoom meetings. I can help you structure the case and even the language. You can keep the relationship, and I help you deliver the advanced planning conversation. You don't have to avoid these opportunities just because they might feel a little uncomfortable. Concierge is here to make you look bigger, stronger, and even more confident in front of your clients. So if you'd like help turning RMD anxiety into a clear, structured income story using annuities, reach out to me. If you want help growing and diversifying your practice, or if you'd like support, having these RMD and income annuity conversations with your clients, call or text me at 763-265-3297. Together we'll bring clarity, confidence, and concierge to your clients' retirement income planning and make RMDs one of the simplest, most value-added parts to your practice. Again, give me a call at 763-265-3297. Thanks so much. I look forward to speaking to you, and we'll talk to you soon on the next Concierge Corner. Bye-bye now.